The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 16th day of October, halfway through the month. My pleasure to be here, and thank you to our great hosts. Let's see if we can keep that high standard up. A couple of things going on here. New record highs. Oh, does that sound boring? Of course, you can never be bored in a market. So let's just run it. The E-mini goes to a new high of 25,577.75 this morning in leg G/C. Now, this is so fascinating to me. It is rare that I can ever recall going to all-time highs. And if you go to the E-mini, look, 1, 2, 3, 4, 5, 6, 7. 7 out of the last 8 sessions, you've only gone about 8 S&P points, E-mini points, higher to all-time highs. That is so unusual. Usually there's a spike up and a pullback and then another sharp spike. You could do those 8 points in 2 sessions. It's taken a week and a half to get to 25.57.75. Is that a bad thing? I'm going to talk about it in the context of why over the weekend I must have sent out well over a dozen, maybe 13, 14 charts to subscribers on my opening call. We're fortunate right now. Even the positions that we have are still doing extremely well. The long side, we only have one short position, and it is at this point down a penny. I think I don't want to talk out of turn. Let me see. Oh, am I going to find it? Oops. Where did it go? All right. Well, I believe when I last looked, it was down a penny. But everything about it says that on a short-term basis, yes, I know that, and thank you to the subscriber who sent all that information about the S&P 500. This is one of the longest streaks we've ever had without a 3% drawdown, going back to 1928. 234 sessions from the 7th of November 2016 to the 11th of October. So now we've gone even higher. So that means we're at 235, 6, 7, 8. Okay, so we're getting there because 241 was the previous all-time high in the longest duration without a 3% drawdown. And that was in January the 26th of 1995 to January the 9th of 1996. So, and the S&P was at 467 and ended at 609. So what I'm really looking at, and this is what I thought I'd spend my time on over the weekend. Fortunately, this is one of those weekends. I won't be able to do it next weekend, this coming weekend. I'm going to be away. But this particular weekend, I just took as much time as I could just to lay back and look at the charts and try to work out with different techniques what I think is going on. I believe I've deciphered it to a certain extent. So let me just explain what I'm looking at. I'm pretty sure we're going to break this and make this will be the longest winning streak without a 3% drawdown. There's a real good chance that we're going to do that. However, what I really spent time on was to say, hey, wait a minute, what happened after those 3% drawdowns? Well, there's a mixed picture. Sometimes that was a pretty sharp pullback, continuing, and other times you pull back and you just went right back to the screaming to the upside. But rarely was it ever at such an extended duration of over 2009 was the low. So this is over 7 years of a bull market. So that is very unusual. How many days left to break it? I think it's just a few days. I mean, after all, this was on the 11th. It was at 234. It has to break 241. So that's 8 days to break it. So that'll take us to the 20th. The day after the anniversary of the 1987 crash, October the 19th. Okay, so I'm not even interested in that. What I really am interested in is the fact that even here in the weekly chart of the E-mini trading at 255, 2.75, 5 points off the high of the day. See the 120-minute chart, see how it pulled back from peak D. These Ds can be really important. So let me move this away now because we're done with that peak D demonstration. What we're really looking at here is, and I'm going to run the numbers. Here we go. INDU. I'll just give you parameters. Upside, I think I've been saying for a while that I think that the 22,900s going all the way to 22,990s is going to be formidable resistance, making that 23,000 millennial level a real barrier. This is my thinking right now. I might have to change it, but this is the thinking based on a number of factors. However, the daily charts are extremely vulnerable. The Dow, another little doji can, already struggling to make higher highs. The whole rotational aspect, some of you have found it really difficult to even conceive and believe. Years ago when I spoke about that there's a possibility we could keep seeing high-level consolidations in a sideways trading range as the weak sectors come on strong and the strong sectors take a breather. And that's just what we've seen. We've even seen it within sectors themselves. And we're going to see a test of that over the next 2-3 days in the semiconductors. I'll get into that. Let's just do one step at a time. The Dow is up 37, having made a high of 22,945. Now you've got a resistance, the Chapman Wave inside track resistance level is just a little bit above that. You've got 22,788 as the 9-period moving average. We haven't even closed under the 9 EMA since we broke out above on the 11th of September. Remember the very next day I said I have to go long, and we went long, took a profit, then went long again. And now we still have that, some subscribers still have that position, but we've added a short position, small short position. And one of the reasons is that within the context of the market, the MACD is flattening out. The stochastics are really good at 95%, but extended in time. The unbalanced volume is suggesting that we are really close to at least a short-term pullback. The weekly charts are the ones that just keep me saying, you know what, don't get too carried away for the short side, because the weekly charts are still really strong, even though everything else says, man, you are ready for at least a 3% pullback. The monthly chart's fantastic. So the Dow, a close below 22,690, sets in place a short-term daily sell signal, probably sell mode. I don't know yet. Just call it a sell signal. Then we have to go from there. Pushing into the 23,000s, and I just have to shake my head and say, you know what? Thank goodness we don't yet have started increasing the idea of shorts. We've got longs that are working really well. I don't know. That's the way I'm going to treat it. Now, we've got a break coming up. I'm going to take a little time because this is for me, this is going to be an extremely important week for a number of reasons. So I'll be back in a moment. Basil Chapman, Tiger Technicians Hour, and the Dow is at 34. S&P is now unchanged.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We're back. So a couple of things that I want to mention here is that within the Dow, we've seen how the rotation works. And that's one of the reasons why you've got these tiny little candles right here. And then at any point, you could get a single down day that goes boop, right to the 22,787 level, a big red candle knocking out 5 or 6 or 7 trading days on the left. That doesn't make a sell signal. I want the MACD to cross negative. Look how strong it still is. Histogram's starting to deteriorate, but the price is still there. And the stochastic is at 95%, and the on-balance volume even today is rallying. So I've got to see price destruction with technical deterioration, and I do not see that right now. Look at this. Well, someone mentioned the IBB. You've got IBB looking terrible, terrible. But then what does it do? It uses time. It goes 1, 2, 3, 4, 5, 6. This is the 7th session since the recovery high at 342.50 on the 6th. And it screams up to the 341 something level, 341.69 this morning. Now it's trading at the low of the day. And that obviously would have taken out the shorts, and then all of a sudden reverses down. So this is a market that is becoming fraught with some anxiety. If you look at the SLX, which is the the steel ETF, huge bounce, and now it's giving back a chunk of that. Gray B in the daily, but this is E in the weekly chart, and just stopping dead at the 200-period moving average of the monthly chart, the Van Eck Vector Steel ETF at 43.83, down 20 cents. No big deal. But I'm just saying it's starting to get harder for some of these. Now let's continue. So SPX, the beginning of the week, I want to just outlay the whole thing. SPX red candles, but still making all-time highs. MACD is starting to dip quite sharply, but hasn't crossed negative. Stochastic at 94% is good. On balance volume, but it's turning down. It's lower than it was back when it made that high of 25.29.23 about 2 weeks ago. On balance volume. On-balance volume is right in the area that says, be careful. This is where you start to see turns to the downside. The weekly chart, very strong. F/B had a doji candle last week and stuck a little bit above it. If it closes above 25.57.65, the high of last week, that's very good. If it closes under 25.41.60, the low of last week, that's saying, uh-oh, a little bit of a turn down. Be careful. Everything I'm looking at suggests that it's a real struggle. If you look at the QQQ series, here again, it's gone to a leg D, went to another D, a leg D extension today. 148.89 is the high. Let's see, 89. Yep, 89 is the high. And MACD, I showed subscribers. Oh my God, I couldn't even tell you how many charts I sent. So look at this. MACD is very strong. Stochastics at 93%. It only just got there and flattening out. On balance volume is ABC. It's in leg D to the upside. Strong, but getting a little overbought. Weekly chart hasn't crossed positive, but it could cross positive in the MACD this week. And that'll be another positive. and the stochastic's rallying at 94%. It will take a decisive close under the 147.54 9-period moving average. I'd even put it at the 147. It has to close. I'd say that if it closes under 147, you're going to start to see some deterioration. But the SMHs, the semiconductor, really is part of that whole QQQ series. That's a red candle so far today. It's up 9 cents at 97.29. But the MACD is strong. The stochastic's at 94%. And the unbalanced volume is not quite confirming, but getting to an overbought situation. And then weekly chart is very positive, as is the monthly. Leg D/C in the weekly, and D in the monthly. And it just went to a D in the 120-minute chart. Under any other circumstances right now, I'd be saying, you know what, I'm quite comfortable starting to add to the short side. In fact, under almost any other circumstance, I would say that. It's just that this rotational aspect is very important. What do we have today? We have, where did I put it? We have earnings reports. And then tomorrow's LRCX, which is Lam Research. That's going to be really important for the semiconductors. If there's a disappointment in LRCX, whoops, type it into the little square there, into this rectangle. There it is, LRCX. Lam Research trading at 191.66. I try to count it in different ways. I really do have to think of this as a leg C at this particular point, unless there was. I don't want to get into it, but there's a chance that there's something that's called the Chapman wave flat base, the unconventional flat base restart. Ooh, but the term explains everything. It's a little complicated if you haven't actually done anything on the instant restart. And what happens is there is an instant restart at peak D, where very quickly, especially if it's after 2 bars and not 3 bars, you make a new all-time high. And then if there's a new high and it goes to an F/A or F/B, and then pulls back and breaks the low of that leg D, there's a chance you could go to a new D or an E. But when that is completed, the next pullback goes right down and takes out the low. And in this case, it would be the low of the 26th of September of 167.52. 167.52. All I can say is I don't know what's going to happen to have Lam Research do that. I'm just throwing it in here into the pie, as it were, because it's G/C in the weekly chart, and I don't know what to say about. I don't want to say about a monthly chart is in leg E. This looks very overbought, but if the earnings are good, it could go. What can I say? That all I'm looking at is SMHs. A close below 95, that's a real short-term problem, not yet for the weekly, but a short-term problem for the daily. It's at 97.36. A close at 99.76, you're probably going to go into the hundreds. I don't know. Okay, so now let me go to the IWM. IWM was leading up, was leading down, has been leading sideways to down, and here again it's down 28 cents at 149.09. I said, yes, I'm going to draw the oval in because it's a potential Chapman wave stalk leg, but really what it looks like, and I'm going to do this again. In fact, I'm going to take this away. My eye says this is just too far-fetched. It's more like an arch formation that is going to break to the downside. So the most vulnerable of all the indices at this particular point on the short term is the IWM. I'd mentioned that the weekly chart has got a G/A. G is, whoa, be careful on the downside. A is, any pullback is a buying opportunity. My eye says that it's going to be a resolution of both. What we're going to get at some point is that the IWM, the Russell 2000 and 149, is going to test the 145s, the 9-period moving average, somewhere around there. And that's where we'll see, is it now going to be a new inside buy mode as it moves up? Or is this going to be a breakdown because it goes to 144 and it turns out to be a single leg up failure pattern? There's nothing to do. I would be on the short term, I'd be looking negatively at the IWM, and I'd just wait and see what happens. Now I want you to go to gold. See, this to me is going to be very interesting. Gold trading up $1 at 13.05. I'd said that the technicals and gold on the daily were so strong that the price didn't quite reflect the move, that the move should have been above the high of the 26th of September of 1317.1. It hasn't got there yet. And if you look at silver, I'll be back in a moment. Silver, a very nice move, has potential for a Chapman wave squash formation, but I'm really looking at the dollar, and I want to discuss this in a moment. I'll be back. Dow's up 33.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone, we're back. So let's go. Couple of this Yahoo thing. All right, couple of questions I had. So I had a question about the dollar gold. Why am I talking about the gold dollar relationship? Maybe not using the USD JPY. The relationship is just one of trend. It's not one of percentage moves. I'm looking at the dollar right now, trying to break above the 93.22 9-period exponential moving average. That's 93.14. This morning it went above it just for a moment. If you look at the UUP, it's pulling back a little bit, but it's still up. We still remain long the dollar from the low that was made back on the 8th of September, but I'm watching it very closely. And my thinking here is that gold will be an indicator if it starts to trade in the 322 area in the next 2 days and not pulls back under 1294. It's at 1305 right now. My eye says that the weekly chart It's just not showing enough strength. A little disappointing, the action. And therefore, I'm a little suspect of the move right now. I think if it does move higher, there'll be plenty of time to be buying gold stocks. I'm just giving you a little time. And then I will tighten up my dollar position because look at the USD JPY. It led that turnaround on the 8th of September. It did everything, and then it just failed. If this is a peak B and this is like a peak C, phantom peak, and that was a D, then it would have got the same as the dollar. It would be pulling back. But so far, it's just arched over. It hasn't broken down at 111.74. If the US dollar, this is the dollar Japanese yen currency pair, breaks 111 support, it's a problem. If the FXY, which is the ARCA, this is the currency Japanese yen ETN, sorry, in a leg B up against the 200 period simple moving average, is able to push sharply into the 86s, 86.60s, 200 period moving average. That's going to be very good action. If you look at the euro, it's come back a little bit off the low. It's at 1.1810, but it really is struggling here. And if you look at the weekly chart, it's saying, you know, that support at 1.63, the 200 period moving average, it looks like it wants to be retested. So those are the parameters that I'm looking at. If you look at the Nikkei futures, spectacular move. I've got this in a leg F right now. That could change, but I'm calling it an F. Yep, there was an instant restart. I called it F/A. I'm just calling it F for now. It meets most of the criteria that I would be looking for. Single leg, sharp leg D in the weekly chart, sharp leg D in the monthly chart at a new recovery high. Nikkei 225 continuous contract above the highs that were made back in 2015. Very good action. A little bit overbought, that's all. Very good action. If you look at the FXI, which is the, who asked that question? Someone asked me about, was that Julie? Someone asked me about the FXI. So A, B, F, B, C, D. This is leg E right now. No. This is C, this is D. Let me just check. You've got 46.42 and 46.34. 42.34. Yeah, this is still leg D. It could go to 46.39. 42. It missed by 4 cents so far today, going to a new high, which would be leg E in the weekly chart, the iShares China Large Cap ETF. Leg D in the, how many Ds have we got in the monthly chart? So nothing wrong with that. So I'm not going to fight DEDOW. If you look at German index, this is an alternate count, A, B, C at 430.96. 430.91. So far, I'm calling this a G/C. It should go to a D in the next day or two. High level consolidation over the last 2 weeks hasn't broken out by much. And the weekly chart is a spectacular, here again, have to call it a leg A. I mean, this is amazing. So I don't want to, every day, I'm looking at stocks that we want to buy, looking at stocks that we want to short. The bias has so far been buying and not shorting. That's all I can say. So question, Basil, would you hold RICK, R-I-C-K, R-I-C-K. This is RCI Hospitality Holdings, monthly A, B, C, excuse me, 12.99, 12, yep, A, B, C, D, E, F. It's in leg F monthly. Very good technicals. The daily is, the weekly is, I don't know. Oh, there we go. A, B, C, D, E, F, or it's a brand new F/B. You know what I'm going to say? 27.39 RICK. I like the pattern so far. If you had asked me right here, would I buy or would I sell? I'd say I wouldn't sell. I mean, I wouldn't buy it. I would wait for a test between 26.30 and 25.70. If that holds, I might consider buying it. I wouldn't be shorting it either. So would I hold it if I had it? Yes, I'd be holding it. And if it closes at 27.39 right now, if it closes under 26, if it closes under 25.55, I'd say, you know what, it's time to reassess. That's all I would do. So yeah, it keeps taking every opportunity to move higher. I wouldn't do anything, no. Next question I had was high-grade copper. I didn't get to high-grade copper. High-grade screamed to the upside. Leg D, beautiful, beautiful chart. Leg D daily, leg E weekly, leg D monthly. And that's another reason why when I was doing my little homework over the weekend, I kept saying, high-grade copper moving to the upside. The TLT bonds holding very well. When I went to my my triple yield chart, I'm looking at this and I'm saying, now I think there's a chance for yields to come down again, and for the TLT, for bonds to rally. And that's what we're doing here. I like what I'm seeing. I like the fact that there's a rectangle for sideways trading platform in the weekly chart. It's held to a higher high. It's testing the 9-period moving average at 125.84, down a penny. I like what I'm seeing. So I think that yields are going to be pulling back. And my contention has been if the TLT really screams into the 126s or higher, we might then see money coming out of equities, some money, and going into the safety of bonds. That's all I can say. Look at crude oil. Crude oil right now is up 40 cents at 51.85. Made a high previously on the 28th of September at 52.86. My contention has been that we will make a leg D in the weekly chart above 52.86, and then we've got to be a bit careful. So we're close. Keep a watch on that. What am I forgetting? I don't think I forgot. I think I've done everything I needed to do. No, except I haven't spoken about the VIX. We'll get to the VIX in a moment. Basil Chapman, Target Conditions Hour, 1034. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So I'm not sure. I believe I might have a call. I'm just going to say hello. Anybody there? No. Yes. No. For Al, my IM's the IM's not working. So if you can use the den, I'd appreciate it. So all right. Well, so just give me a yell if there's someone on the line. I'd love to take the call. Intel makes a peak G/C. Everything about it says that it should be pulling back from here in the daily, not the weekly, but the daily. And that's the kind of thing I'm looking at all over the show. Dailies are suggesting they're overbought, but the weeklies are still very strong. It's the greater tide. So I wanted to just mention that. Next question I had was about the Chinese. Yeah, the transports at this particular point are, you see, it's the same pattern right there that we just saw, exactly the same that we just saw on, the heck was I looking at a minute ago? Intel. Except it just did use a rogue wave, spike to the upside, the IYT, iShares Transportation Average, ETF, and look what happened. Spikes up and now it's pulling back sharply. And I suspect this is giving us a tip-off to say, yeah, the dailies are becoming extremely overbought. Yeah, you could go for a record another few days and you'll have that record of not having a 3% pullback. But I think that we are starting to see some grinding away at the strength. So Mike is sounding distant. Let me see, put it up a little bit like that. One of those days. There we go. So I hope that's helping. So talking about, let's see, so that's the IYT. If you look at Federal Express, FTX, FTX has the same pattern except it failed. That's a right side failure pattern. Weekly chart peak D. So I'm looking at the transportation index or average doing the same thing, because if you look at the XAL, which is the airline, that made a peak E and it held better. Today it's joining the others. So this to me is a heads up to say, don't be afraid to take on some short positions, but be very selective, and you don't have to get carried away, because you could even say, you know what, I'm not going to put more money to work on the long side at this point, or it's very selective. I'm just going to try to be building. We've got a nice cash position for any sudden deterioration in the market, for stocks that have been fantastic that we missed on the upside, or that we would like to add to. Look at the Bank of America that we have. Now it's at 26.21. Look at this. Beautiful chart pattern. Pulls back Friday on a perception of a bad earnings report, and all of a sudden it closes near the high of the day, and today's a follow-through up session. This is good. Is it helping the XLF? Absolutely, it's helping the XLF, but XLF, I think, has a problem. But immediately I grab this line, this trend line. Learn how to use these trend lines, folks. Just 2 lines can give you so much information. It says in this Chapman Wave falling axe formation, a close in bank, doesn't have to be a close, preferably a close in Bank of America, XLF, the S&P Financial Spider Fund, in the 2639 or higher level is like a breakout and says you should be testing the all-time high of 46, I'm not sure if, now I can't remember now, the recent recovery high. But if it falls decisively below 2589, the low of the 13th, Friday's low, be careful. It's going to fill that gap at 2550 very quickly. So that's the way I'm looking at the markets. Patterns are repeating. patterns are being mimicked, and it's very important to decipher them and try to do your best. So the XRT, another question about the XRT, remember, not one of my favorite vehicles in the sense that it really just has a few of the retail, S&P retail sector in it, trading at 39.69, horrible chart, looking terrible. The RTH in it was a much better chart. Why? Because it has Walmart. So the RTH. So no, I don't like at 39.70. I think is going to be testing the 38s very quickly. The RTH, which is the Market Vectors Retail ETF, has been gapping up and down all over the show. This looks like an overseas chart the way it's gapping, but it's also starting to fail. It's a way better looking one, but not looking good in the daily. It's got that H pattern that says that at 680.85 down 51 cents, the 80.02, let's call it 80, 200 period exponential moving average is beckoning. Unless there's a spectacular move to the 83s within 3 to 5 sessions. That's going to be tough. Next question I had was Citi. Yeah, Citi, Citi made that peak E on Thursday, had a lousy day Friday, and a lousy day today. I think it's done for now. E in the daily. I've got it as an F in the weekly. I'm not going to change that right now, and an E in the monthly. If I'm correct, that says that some of these bank stocks might not be doing as well as one would expect. Goldman Sachs up today at 241, up 47, up 2.94, making that same pattern we were looking at a moment ago. Chapman wave falling X formation. But the difference here is that the weekly has only made a peak C, and it should be trying for a D at some point. So watch it closely at 241.41. A close below 235 in the next 3 to 5 sessions would be very poor action. The close above 243.50 says, aha, you could test that recovery high of 247.02 made on the 6th of October. Next question I had was, yeah, so JWN. Is that Nordstrom? Yep, that's Nordstrom. Whoa, ugly chart. Look at this arch formation. Arch formation, don't touch it at 40.06. I think it's going to, at 40.06, the 37.84 level is the 200 period, monthly 200 period moving average. I think it's going to try for that. Look at the diversion in all these different charts. Look at J and K, junk. Well, it used to be called junk, but junk bonds, they don't call them junk anymore. J and K is the symbol, but they actually call them Spider BB Barclays High Yield Bond Fund. Peak E in the monthly, arching over, but it hasn't broken down. Peak E in the weekly chart at the 200 period moving average, having pulled back from the 37s to the 36s, and now trading at 37.17, just kind of stuck for now. Looks more like it's going to be pulling back. And that kind of, if I look at the TNX, which is the 10-year, that's a peak E daily, single leg 8 weekly, and the monthly chart is still within the very long-term bear market, lower highs and lower lows scenario. Trying to make a break for it to the upside at 26 and hasn't. This is the 10-year yield, T-note yield. So I'm watching this very closely, and I'll tell you why. If the TNX, the 10-year, where a lot of things are benchmarked from the 10-year, not the 30-year, but the 10-year. If the 10-year can break into the 23.80s, it's a point higher from where it is now, 22.89, I have to then say, you know what, my chart's coming back to say that the yield, the triple yield chart, is improving. But at this point, it's had the bounce, and it looks to me as if the Fed is not going to be raising rates at this particular point. Basil Chapman, target conditions are Dow's up 40, the S&P's up 1.74, another divergence. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, everyone, we're back. So just a couple of quick questions. Melly, which is Mercado Libre, Inc., e-commerce online marketplace in Latin America. I think it might have made a hat-trick top, and I'll tell you why. When I'm getting to an E or an F in the monthly chart, D, E, or F, and I'm starting to see some weakness, and the stochastic was weakening for a long time. MACD is turning down, but still not cross negative. And it made this high that was at 297.95 back in May, and I wasn't able to break above it. And then it made an arch, a cup formation in the weekly from that May high, May the 19th, week of the 19th at 297.95. And it turns out that the latest peak was a peak F. It was a peak D initially way back in May. And then it comes back down, it makes a peak F. I'm looking at this and I'm saying, you know what? If the monthly goes to a sell signal, and it's get down below the 9-period moving average. If in October it closes way below 238 in the monthly chart, the monthly has gone to a sell signal, the weekly is in a sell mode, and the daily is already way in a sell mode for quite some time. That says to me you're looking at months before there's even a chance of a turn up to an all-time high in Mercado Libre. So be careful with the stock. If you own it, I think it's got an upside, is very limited, but the downside is starting to open up quite wide. Be careful. It's down 13 at 231 MELI. Okay, next question I had was, where did it go? Many, we did that. So that's the potential for a hat-trick top. So the next thing is I had a question, had I gone through the IBB? Dano, yes, I went through IBB. I'll do it one more time. I said that IBB shot up just enough to have shorts cover but not break to a new recovery high. But this is very negative action, and it went down for about 7 or 8 sessions. It rallied sharply early morning, and now it's down only 39 cents higher. And it's below the 9-period moving average. This is really struggling, and my suspicion is that the IBB is in a slow rollover to the downside. It'll suddenly have a sharp decline below 330, but right now 336, it's just stuck in a range, not really going anywhere, but not breaking to the upside. Basil Chapman, Tiger Technicians Hour. Check out my opening call. I think you'll find it informative, profitable. Stay tuned for Steve Rhodes and all the other hosts. I'll be back tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.